Every year, people ask themselves if they should buy Bitcoin. But this gets more intense when the Bitcoin prices are going down. However, it's a fair question. Bitcoin has been down more than 30% in the last year. And we have other assets such as the S&P 500, real estate, gold, even silver, reaching all-time highs. We have the rise of AI, we have the war in Iran, a lot of things happening. So people are asking, does it still make sense to invest in Bitcoin in 2026? Or has the train left the station? To answer this question, we need to be realistic when we look at the data. Because while the past doesn't dictate the future, it can certainly give us a good idea of what might happen in the next 10 to 30 years. And that's what I'm going to do. First, let's look at the past cycles of Bitcoin. As you probably know, Bitcoin has a 4-year cycle. Every 4 years, the amount of Bitcoins issued reduces by half. Just like a central banks have a monetary policy in which they decide how much the supply of money will increase in a certain year at a certain time. However, while central banks don't have a limit to how much money they can print or how much the money supply can increase, with Bitcoin it's completely different. There is a strict programmed limit to how much coin supply can increase in a given time. This is what is called the Bitcoin halving. So here we can see that in the first cycle we started in 2012, which was the first halving. Coin prices rose about 7,000%, going from $12 to more than $1,000. After that, it dropped about 85%. However, in the second cycle, Bitcoin went from $650 to about $20,000. That is an increase of 291%. After this, it also dropped again about 84%. In the 2020 halving cycle, Bitcoin went from $8,600 to $69,000. That is about 541% increase. After that period, Bitcoin dropped 77%. And in the last cycle, in 2024, Bitcoin went from $63,000 to about $126,000. That is plus 100%. Although Bitcoin reached an all-time high at $125,000, right now it's trading around $70,000 to $75,000. That is 46% down from the all-time high. This shows us a clear pattern. After the halving, Bitcoin prices surge, Bitcoin prices go up, and then there's a dip that follows along until the next halving. And we can clearly see that each halving had a decrease in the returns of Bitcoin, except for 2020. However, we can see that in 2024, which was the last halving, the returns weren't as high as it used to be. Okay, this begs the question, is the Bitcoin cycle over? There are many outlets, many specialists that are saying that the big gain period of Bitcoin is over. We will never see the same returns again. Now, let's see if that's really true. First, we need to understand what is the difference between this current cycle and the previous cycles of Bitcoin. Because however we saw a clear pattern from halving to halving, from cycle to cycle, this cycle is remarkably different. What is the difference? First, the introduction of Bitcoin ETFs made the flow of capital to Bitcoin increase. About $50 billion were put into Bitcoin. This meant institutional capital going to Bitcoin. This helps reduce Bitcoin's volatility. Another thing that happened was that there was a diminishing supply shock. That is because 94% of all Bitcoins are already mined, which means that the new halvings, the new supply is having very little marginal effect in the Bitcoin prices. Another thing is that the time that Bitcoin reached the all-time high in the previous halvings was different from this current cycle. Bitcoin reached the all-time high faster than it did in 2020, in 2016, and in 2020. This alone creates many questions, not just whether or not the Bitcoin cycle will end, but also what will happen to Bitcoin prices itself. Okay, let's look at a quick graph. Here we can see that the current cycle is the least impressive of them all. In this graph, we can see exactly the pattern that I was explaining before, that the Bitcoin prices rise after the halving until they reach a peak. After the peak, they usually go down in a period called Bitcoin winter or crypto winter, and then at a certain point, it starts going up again and the cycle repeats itself. However, this alone, the fact that this cycle is different, doesn't answer whether the cycles of Bitcoin are over or not. Here we need to be mindful of internet narrative. There are a bunch of people on the internet, on Twitter, even some so-called experts saying that the Bitcoin cycle is over, that this will not happen again, and that this proves that Bitcoin is a Ponzi scheme-esque type of thing. They say that this proves that the cycle is over. Not only is it over, but also proves that Bitcoin is a Ponzi scheme. Now we need to understand what creates a Bitcoin cycle. Is not the prices of Bitcoin. No, it's the fundamentals, the foundations of Bitcoin itself. And this is exactly what I wrote here. Here you can see it's about fundamentals, not price. The problem here is people over focus on Bitcoin prices. And this gives the false impression that what gives Bitcoin meaning, it's simply its price. And when people see that the Bitcoin price are going down right now, they automatically think that this can only mean that the Bitcoin cycle is over. We need to see if the Bitcoin fundamentals change or not. The same thing we would do at a stock. The same thing we would do to gold. Did gold fundamentals change? No. So why are we thinking that the cycles created by the fundamentals will change? Just because there was a change in price doesn't make any sense. So what are the Bitcoin fundamentals? Essentially, the fundamentals. The first one is the supply cap. There is a limit to how many Bitcoins will ever exist, and that is 21 million Bitcoins. Right now we have about 17 to 18 million Bitcoins, which means that we have 3 or 4 million Bitcoins left to be mined. This will not change. This did not change. Actually, the demand of Bitcoin is increasing. More and more companies are getting into Bitcoin. Countries are getting into Bitcoin. But the supply, it remains stable. We know that the cap of supply of Bitcoin is about 21 million Bitcoins. Actually, not about 21 millions. It's exactly 21 million Bitcoins. And that did not change. Another thing, the halving schedule, which reduces in half the reward for mining Bitcoins, which is essentially what creates the supply cap, also did not change. Another thing, the hash rate of Bitcoin. The hash rate of Bitcoins allows you to assess how secure the Bitcoin network, the blockchain network is. And every year, including 2026, including at the moment that I'm recording and the moment that you're watching, Bitcoin is becoming more and more secure as more people get into Bitcoin. The hash rate increases, the power of Bitcoin increases, the network becomes more secure, becomes faster, cheaper. All this is happening. Another thing, the decentralization of Bitcoin remains a thing. This fundamental did not change. No central entity can control or manipulate the prices of Bitcoin, the supply of Bitcoin, the private keys, the wallet addresses, any of that. It remained the same. Volatility. Volatility is one of the main points that people speak about. The volatility of Bitcoin has been decreasing, and that's a good thing because it's making Bitcoin more and more stable. But the fact that the volatility of Bitcoin is relatively decreasing also means that probably at a certain point the returns of Bitcoin will start to diminish. That doesn't mean they will diminish to the point of becoming basically another S&P 500. No, but compared to the 2012 7,000% gains, yes, that probably is over. Now, we need to understand two things here, and here's where I want to talk about what I consider to be the gold strategy to invest in Bitcoin. This is the answer of whether or not you should buy Bitcoin in 2026. The first thing you need to know is the gains you get in any asset are due to volatility. there's no returns without volatility. Volatility is what creates the upside that allows you to have big gains. As Morgan Housel says in The Psychology of Money, I recommend you guys read that book. It's a very interesting book. And there he talks a lot about the of volatility, that people have a negative view of what volatility actually is. And if you're interested in understanding more about the importance of volatility, I recommend you check the link in the description. It's a link to my Substack. I wrote a test. I made a test text. I made a post on Substack where I dive deep into what volatility is and the importance of volatility. But only if you like reading, because it's very nerdy. But if you like that kind of stuff, check it out. You'll like it. Now, what's the gold strategy? If we have the issue of buying or not buying, the first thing is, should you buy? If you believe in Bitcoin fundamentals, yes, you should buy. I don't care if you're watching this video in 2026 or in 2027. As long as the Bitcoin fundamentals remain the same, as long as the supply remains the same, the halving, the hash rate, the decentralization, the volatility, as long as those main characteristics maintain, investing in Bitcoin is a sure thing to do. How much? That's on you. You know how much you are willing to risk, because there is an inherent risk with any asset. Now, what's the gold strategy? The gold strategy, it's simply DCA. It's dollar cost average. It's not the fanciest strategy. It's not a mathematical, crazy, engineered strategy, but it works. It does works. It allows you to ride the waves and get the best gains possible. I've been doing for about 2 years now, and I can tell you, is the best. Forget trying to time the market. Don't try to guess when to buy. Buy buy consistently at a regular date. In my case, I buy some amount of Bitcoins every Wednesday. I usually do that every Wednesday. Sometimes it's $8, sometimes it's $50, sometimes it's $100. I don't care how much I'm buying, but every Wednesday I buy at least a little bit of Bitcoin. I know that in 10, 20 years, that'll pay off. I will be looking at the past and I will be like, I made such a good decision. And here I want to talk about something which is an honest doubt that some people have. And I understand why this doubt exists. And it goes back to this graph. Let me show you closer here. Here you can see that the Bitcoin gains are reducing. In 2012, Bitcoin rose 7,000%, but in 2024 was just on quotes, just 100%. And people are like, should I really invest in something that apparently is having diminished returns? And that is a complex question to answer in this video. I don't want to make a 1-hour video. I will make another video. Check on my channel. It's probably already there because I'm going to post both at the same time. Check this video up here where I answer how to deal with the Bitcoin returns. If you're investing in Bitcoin, if you invest your $10, what are the returns that you can expect? Can we see $100 becoming $10,000? There are many YouTubers, I'm talking about Bitcoiners, really hardcore maximalists, really hardcore Bitcoiners saying that yes, Bitcoin can still pull a 1,000 time growth. It can make your $100 become $10,000, $100,000. And I don't want to disappoint any of you, but I don't buy this type of BS. I will show you the truth about the data so you can really know if you're going to retire with Bitcoin or not, or you're simply going to make an extra buck, or worse, if you're going to lose money. If you're interested in any of that, please check here the channel. Thank you for watching up until now. Tell me if there's something about this video that you didn't like or you want me to improve, because at the end of the day, if I want this channel to work, I need to make videos that make sense for you guys. So thank you very much. I see you next time. Please subscribe. I forgot to say that.